Hello, my name is Andreas Feiner. I'm one of the founding partners of Arabesque Asset Management. We're the world's first ESG quant asset management company, and we take the values of the UNGC, the principles and the SDGs, as well as the ESG information into a rules-based investment process. We combine it with fundamental data and have a sophisticated risk management on top of that. The mission of Arabesque is actually to help mainstreaming ESG or sustainable investing around the world, and we do it with three things, and this is something that has been already mentioned. The first thing already, it's returns, to make it relevant for the investors because they make more money with less risk. The second thing is a lot of academic research which we are doing, and number three is talking about it. This is what I'm doing here today. So the CEO of Accenture today said that only 10% of investors are interested in sustainable information and only push corporations into delivering that information. And I must really agree. I think that's probably an accurate assessment there. But there's hope. There's light at the end of the tunnel, actually. We believe that sustainability and sustainable investing is one of the most significant trends in financial history for a couple of decades. The question is why? And to me, this is a quite easy question. Again, it comes down to returns. One is because the SDGs, ESG, and the UNGC principles are relevant for companies and actually help them to deliver better returns over the medium to longer term. And this also translates into returns for the investor. So at Arabesque, we are trying to integrate that, as I mentioned already. And on average, we can make 1.5% more in returns for our investors when we use this information as opposed to if we disregard it. So we use more than 100 billion data points. We use a lot of technology, and we have a lot of innovation going on. So let me please show you with a small video how we do this and how we create those products together. So we use data of 77,000 stocks in the world. We have everything that is tradable in our database. So we try to depict that here a bit, and I hope everybody can see it well. We have 20 industries which you look into. Every country in the world is in our database, and each and every of those nodes, which then grows up, is one company. So there is obviously more companies in the US and in developed markets than in emerging markets. And there's an interactive tool, so you can play around with it as an investor when you can build your own portfolio. Here is something where we can analyze a company on the 12 things that we look into, which is ESG, the United Nations Global Compact principles, and so on and so forth. We're not a product push. We're something that is a toolbox for an investor, so they can pick and choose the region whichever they want to invest in. They can also look into the liquidity requirements which are important to them, so are they looking for large caps or small caps? Everything below which is red is then not eligible for the product, actually, and everything which is above is eligible. We then look into something which we call forensic accounting, which is basically something where we combine companies that are better in terms of their accounting and governance risks. We look into the principles of the United Nations Global Compact. We don't want to have companies in there that are not compliant with those values. We have a very sophisticated ESG lens where we integrate the SDGs as well, and I will talk about them later. And then we look into some financial ratios, because a company that is reckless in their balance sheet management is not a sustainable company in itself. Here's something where investors then can pick and choose which companies they would not like to have in their portfolio, which industries they would like to avoid. The result is then an investment universe, which approximately 1,000 companies, which are the best companies that we could identify. We then obviously start with fundamental analysis, because sustainability is not enough. We need to have the financial analysis as well. We look into G-score and F-score, which are terms which are well known in academia around balance sheet analysis. We look into analyst information from banks such as UBS in order to leverage that into our thing. And then we build a product that outperforms its benchmark. We then have another product that, on top of what we have there, actually has an implemented risk management there as well, where the goal is to have the maximum risk for the investor at 25%. We look into all the 1,000 companies. We rank them by the state of the market and how good they are in terms of volatility going up and down. And then in order to protect the assets from the investor, we can go up to 100% in cash if the markets are going down. To us, this is quite important because only if we can safeguard the assets of the investor, we can get them to invest into us, allowing us in return to allocate capital into companies that are better in terms of their global compact compliance, the SDGs, and the ESG principles. So going back to what the CEO of Accenture said, with the 10% of the people from the investor side who are interested in sustainable investing, I believe this is going to increase quite a lot. Because with this data revolution that is coming out at the moment, and with the technology, and by combining the two, we've been able to give finance a purpose, and more people will get this. And with the help of SASB, the data quality will become even better, and then there's kind of a positive feedback loop. So it's quite important for companies to report on ESG issues, on the SDGs and the compliance with the United Nations Global Compact. So investors such as ours can really integrate that into the investment models and then hopefully build better products and channel capital in good companies.